Hello everyone, welcome to Technical Analysis Workshop with Nimbus Capital. Today we are going to talk about something a little bit more technical than usual, and that is of course volume spread analysis. This is a Patreon only exclusive video. So if you are watching this video, then I assume you are paying for the Patreon subscription fee, and hopefully you are already aware of some of the volume spread analysis that Nimbus Capital uses when we are trading. And the one that I'm going to talk about today is low volume candle. In our previous technical analysis workshop, we have gone through some example of why low volume candles are actually important and why you should look at them. So today we are going through more example of such scenario. Volume spread analysis is a very, I would say, not an easily understood analysis. A lot of people know about volume analysis. They think they understand them, but the way they execute their trade using volume spread analysis is actually totally wrong. For example, I have many traders come to me and say, hey, so volume spread analysis is like this, like that, but how come my trade went the other way and it becomes a loss? So most of the time when I look at all these scenario, right, I tend to realize that they are not really performing their VSA properly. VSA is one of the most hard to understand, and in fact it is one of the most accurate technical analysis that you can ever master. And the issue with VSA is that a lot of traders, they only recognize and look at high volume candles. So if I see Alibaba Group right here, when the normal VSA folks, when they are trying to analyze this chart, what they will look at it, they immediately look at the high volume candle that they see right here, and then they will think that, oh, this is the bottom. We should like a lot of buyers are coming in high volume. There's a pin bar, and then they went in, and what they realize is that after a while, it start to go all the way down, and they start losing money. So and sometimes the high volume candle does work, but if we look at it from a statistical perspective, this is very important to look at trading with a statistical mindset. Is that if you take like 100 trades where you take a buy position on a high volume pin bar candle, right? What you will notice is most of the time you will come to a 50-50, meaning sometimes you win, sometimes you lose. Then that's not really an edge. That is just buying something on a signal that doesn't give you any edge at all. Even though when you win 50% of the time, right, you fool yourself into thinking that you do have some kind of edge. But actually, if you keep doing it over like perhaps 1 or 2 years, you realize that, hey, actually my strategy is not really giving me any edge. It's like 50-50 like that. But the key thing is that a lot of trader, number one, they do not keep track of their trade journal. They do not keep track of their strategy. So by the time when they realize what they are doing is not working, right, probably 2 or 3 years have come by, they have lost a lot of money, and then they are still kept in the dark that their strategy is not working. So that's how a lot of traders are stuck trading for 7-8 years but still doesn't make profit. They are still not profitable. Experience doesn't come just because you are in the market long enough. Experience comes when you learn from your mistake, when you document all your trades, when you review them, when you back test, when you forward test. That is where experience will come in. Practice make perfect, but it will only make perfect if you are practicing correctly. If you keep doing the same mistake over and over and over, if you keep banging the wall with your head, the wall is not going to move, the wall is not going to topple. But it seems like you are putting in a lot of effort. It seems like you've been banging on the wall for the past 10 years, but there is no result. Effort doesn't equate to result. That's the saddest realist thing that I can tell you, not just in trading. almost everything in the world. Effort doesn't equate to result, and just because you put in effort, it doesn't mean you are entitled to a result. You need to put in the correct amount of effort in the correct way. Okay, so let's dive into what we are talking about today, which is volume spread analysis and low volume candles. There's the specific chart that I want to use today, which is Tesla. Because recently Tesla have hit an all-time high, and we have this candle recently on which day is that? That was 2 days ago, should be a Tuesday candle. We have a very strong pin bar candle coming in with a long volume candle, a very high volume. In fact, the volume is almost exactly the same as the previous day, the big green candles like that. So number one, the newbie traders, right? The newbie traders, the newbie VSA trader, when they look at this, the first thing that they are going to think is, oh my God, it's a shooting star and the volume is so big, meaning there's a lot of seller, time to short Tesla, let's short, confirm crash one. And then they go and short. And then what might happen is maybe Tesla might go down a bit, maybe like 4 or 5%, or okay, Tesla slightly more volatile. Maybe it will go down like 6-7%, and then it will kind of like hover around. Then after it hover around, right, it will shoot up another like 30-40%. so those maybe those traders who decide to short there, they might pat themselves on the back. Oh, good job, we got that 3-4%. But if you are focusing on shorting this, then you are going to miss the bigger picture, which is the potential long setup that is coming to play in maybe like 3 or 4 months time. So this is like an example of how you should not just simply jump into a short position on a all-time high counter, even when there is like a shooting star or a very strong volume candle. So why is this so? Remember previously when we talk about counters such as Hourglass or even Apex Realty, we talk about the importance of the low volume candle. So if you have no idea what I'm talking about, please go to those videos and go and look them up. It is in, I think they are probably exclusive Patreon videos also. You can look at, you can find them in Patreon, or you can find them in the Discord channel where I segregate them nicely. Let me bring up the Discord channel. Give me a moment. So if you go to Discord and then you come to private content, you will be able to see all the exclusive video here. So there was a CrowdStrike here, Saring Tech, Del Monte, but I think Apex was a freebie content. Oh shit, I can't find Apex, but never mind. I'll try to go and find it. Okay, so when we talk about Apex and the Hourglass, we mentioned that when we see low volume candles like this, what it represents is, it is an indication of no seller. No seller is willing to sell that low. That's why there is very little transaction there. It doesn't mean, most traders, when they see this, what they will come, the conclusion that they arrive is, oh no, this is the support, but there's no volume at the support, meaning there's no buyer. Oh my god, let's short. There's no buyer already. See the volume so low. That's the wrong analysis. That's the wrong interpretation. So I'm gonna repeat this again. Repeat this analogy again. I find it very useful, and that is, imagine that iPhone 13 is selling at $300 now, or imagine that I come up to you and I ask you, will you buy iPhone 13 for $300? I put it on my Facebook. I share it out to the world. Anyone wants to buy iPhone 13 for $300? You will get a million yes. Almost the entire world who know about iPhone will say yes. Like everybody who want to buy iPhone at $300 is like dirt cheap, is like bloody cheap. But if you look at the transaction of iPhone 13 across the entire world, why are there no iPhone 13 being bought or sold at $300, even though the entire world wants to buy? That is because there's no seller. No one is going to sell iPhone 13 for $300. Hence, there's no transaction. No transaction means there's no volume. There's no volume at $300 for iPhone 13. Not because there are no buyers, but simply because there are no seller. If there are seller, right, you can be 100% sure that the buyer will just soak them up. The buyer will just immediately buy out everything. But the fact that there's no transaction, there's no volume, meaning nobody is willing to sell so low. Hence, that is the importance of low volume candle. Nobody is willing to sell so low. Okay, so by looking at low volume candle, sometimes we can deduce when the sudden rally is going to come up. In fact, for Apex Realty, sometime around here, right, we were kind of expecting this candle to come ready. We were kind of waiting for it. In fact, it was perfect with Hourglass. If you look at the Hourglass video, Hourglass video was definitely a exclusive video. During this period, when we saw this low volume here, right, we are expecting this sometime soon already. It's just that we don't know when. We are already expecting this, and it does eventually come. This rally does eventually come because imagine if there are no seller. Imagine once again we use back iPhone. If there are no seller at $300, then buyer will want to pay more. Okay, I'm gonna buy $400, or I'm gonna buy $500, or I'm gonna buy $600, and that willingness from the buyer to pay more because there's a lack of seller, right, is what causing the price to rally up. Is what caused the price to rally up, because now buyers are willing to pay a higher price. They want this product. They feel that this is valuable. They want to pay a higher price. They are not going to wait there forever for someone to sell them at $300. So exactly the same will happen in stock market. If after a period of time, when the market realizes that there are no seller at that price level, they are going to buy up. The buyers are not going to wait anymore. They are going to buy up, and that is what caused the price to rally. Okay, so now with this concept in mind, the opposite is also true. When we are looking at a downtrend, for example, if we are looking at a counter that start to go down, let's look at the perfect example that we have recently, which is Union Gas. What's Union Gas? Okay, if you look at this example, look at the downtrend. Look at that period where it start to go down. This period. So this candle is definitely high volume. That's why a lot of sellers are trying to sell. But before that big gap down move, what do you see here at the top? What do you see here at the top? Low volume, extremely low volume. What does it tell you? It tells you that there are no buyers. Nobody is willing to buy that high. And because nobody is willing to buy that high, right? Seller, at some point, they need to sell lower. They realize that, hey, no one is buying at 1.19 already. What should we do? Let's sell at lower. Let's sell at 1.125, or let's sell at 1.065. And then that's where the selling immediately comes in. So if you are trying to pick the top, right, you cannot look at high volume candle. You cannot look at high volume pin bar candle like what you see in Tesla here. This is not the top. The top is not marked by high volume candle, because if you see high volume candle like this, regardless of whatever the candle pattern is, it still means something. It means that there are enough seller and enough buyers, that there is an equilibrium. That's why the volume is so high. Yes, a lot of people are selling, but in order to have such a high transaction, right, there must be a lot of people buying also. So the kind of information that this high volume pin bar tells you is two things. One, a lot of seller here. Number two, a lot of buyer here also. A lot of buyer here also. So that's basically what this candle is telling you. telling you. So maybe in the next few days, it might just go sideways a bit, or it might come down a bit. But after a while, right? Either the seller is going to like run out, or the buyer is going to run out. Then you will have a much better picture of whether it's going to continue to go up or whether is it going to go down. And before that up or down happen, right, what you will see here is low volume candles. You will start to see low volume candles. So you will see like a consolidation, and then within that consolidation, the volume is very low. Then after that, you will see a spike on either direction. So if you are looking to buy or sell, right, it is that spike that you are looking out for. Not this. This is not a top signal. This is not a top selling signal. So let me give you an example on Tesla chart. Look at this portion here. Look at this portion here. Before it start to like fall how many percent? What's my favorite bar? My favorite bar is gone. Holy Christ. Okay, so this is where Tesla fall 38%. And if you look at the top here, what do you see here? There's no high volume, there's no high volume candle. There's no high volume candle there. There's no high volume pin bar or what. It is low volume because nobody want to buy so high already. There's no seller. There's no seller. Is once again, let's use back the analogy. If I ask McDonald's, do they want to sell their McChicken for $20 per burger? McDonald's definitely going to say yes, of course, definitely want to sell our McChicken burger for $20. But why are they selling at $3? Because there's nobody is going to buy them. Nobody is going to buy a McChicken burger at $20 per burger. That's why they have to sell lower. So same thing. There's no transaction here. There's no transaction here because nobody want to buy that high already, and it is only after that, it is only after this low volume and it start to come down. So it is always the low volume candles that are marking the period before the uptrend and the downtrend. So the moment you spot a period of low volume candle, right, you can be sure that there's a big move coming. It's just that we don't know whether is it up or down. Okay, so always look out for the low volume candles. High volume candles are like what the beginners, the newbie people use. We are not those. We are not. We have a much more sophisticated VSA techniques that we use. Okay, so when let's come back to a much more practical situation that we have here. What if you are what if you decide to chase Tesla and you are stuck here? So either you manage to catch it at the Monday opening, which congratulations, you are in the green, or you you catch it on the Tuesday opening, you decide to chase, which still okay, you are still somewhat green. But let's say you are the kia that go and buy at the top and stuck at the top there. Okay, so if you are that person, what should you do? If you are that person, what should you do? So the first question that I will ask is, when you buy Tesla, where is your stop loss? Okay, when you buy Tesla, where is your stop loss? Your stop loss need to account for any kind of retracement lah. Okay, so if you do not have a stop loss, right, then we have nothing to talk about. we literally have nothing to talk about. You have no risk management in mind. You are just like gambling on a big momentum. Then that's a gambling trade. That's equivalent to going to a casino, putting like $10,000 down on a big or small, or on a red or black roulette table. There's no strategy involved. Okay, if you have no stop loss, then we have nothing to talk about. But let's say you do have a stop loss, maybe somewhere around like, I don't know, 850, or even maybe below the gap, which is, I would say, quite fair. It's a quite a fair. Or let's say you place your stop loss below the resistance. So let's say this is the resistance breakout. Then maybe you are slightly more experienced trader. You know what to do. You have been coming to Nimbus Capital for very long. You know stop loss very important. You know where to place your stop loss. You place your stop loss at maybe 850. Then okay. congratulations, you are way better than the rest of the folk who just YOLO Tesla without any thoughts or consequences. So let's say if you have your stop loss there ready, right, then that's a good stop loss. So what you should be doing now is just relax, wait for the price to show itself first. It is going to stagnant a bit. It's going to like relax a bit. So you already have identified your stop loss and you have account for the risk ready. So whatever in between, right, it should not bother you because you have planned for it. So don't get freaked out by this kind of high volume pin bar candle. In an uptrend, right? In an uptrend, the uptrend is there because buyers are always willing to buy at a higher price. And if you see this candle here, let me repeat this point. If you see this pin bar long volume candles here, right? What that candle's telling you is very simple. Number one, there's a lot of seller. But number two, there's also a lot of buyer, meaning buyers are still willing to buy at this higher price. Buyers are still willing to buy at that higher price, which is why you see the gap up, on Wednesday, even though it's like a big pin bar. Like if people see this big pin bar, right, they expect price to like gap down and then crash. But no, it doesn't happen. It still gap up on Wednesday because buyers are still willing to buy a higher price. And now you see that Wednesday is still a pin bar, but the volume is like almost like 2/3 or maybe around half. What does it mean? It means that maybe seller are running out, which is why there isn't transaction ready. But we don't know. But the key thing is you do not make emotional rash decision based on this one or two candle that we see, because you already set your stop loss there. Once again, trend, chart structure, candle. So the trend is still there, the chart structure is still there. This is just a candle. Do not chase candle. Do not analyze things on one candle alone. Just relax, just follow your stop loss, let the market do its own thing. Okay, so this is one of the very important VSA knowledge that I want to share. Of course, it does require a lot of you to come up with a proper trade setup using VSA analysis. Not only that, you need to properly identify where your stop loss is. So that's two of the most crucial strategy that a trader need in order to be a successful trader. So if you are interested in learning in depth about all these techniques, you can always come to my course. The next batch is in April 2022. So it is still quite a long way. And every year we only take in about 50 people, mainly because we do not do a big classroom like 50, 60 people and then do a crash course within like 1 weekend. We don't do that. What we do is 3 months long. I will hold your hand. I will guide you through. It is a coaching program. So while you are making your trade in the live market, right, I will be behind your back watching you make those trades, and I will guide you and let you know whether you are doing all right or you are doing something wrong, or there is something that you should not be doing. It is a guided program until you succeed. It is not like you pay 3,000, come for Saturday, Sunday, and then after that it's like gone. So most of the folks who came for the course, right, my batch 1, batch 2 students, they are quite successful, and the most important thing is they are independent. That's what you want, independent. There's no point in paying money for a course and then you are still reliant on that course provider to still like hold your hand through the entire trading journey. Because if that's the case, right, what if one day I decided that, okay, I'm not going to support the course anymore, I'm just going to retire, or I don't want trading ready, I'm going to set up another business, then you are back to square one. You are still reliant. Important thing is you must build the confidence and comfort to trade independently. Okay, so thanks you all for tuning in. Please like our video and please subscribe to our YouTube channel because it does help a lot in terms of views and what's not lah, all the usual YouTube stuff lah. Have a nice day, everyone.